I am Mike Stanton. It's Thursday, April 14th. This is the BAM Weekly Muni Market Update. I'm here with Brian Babler from BAM's Capital Markets Desk. Brian, thanks for being here this week. Somewhat of a shortened week, early close today, no trading tomorrow on Friday. How did the markets, what did you see while action was happening?
Yeah, shorter week this week. Good Friday holiday tomorrow, early close today, but we definitely saw plenty of action as we made our way through the shortened session. A little bit of volatility as we've grown accustomed to. Early in the week, we saw rates selling off, and then Tuesday, Wednesday rallying back, and then today's action. We really started out on a weak note after an ECB policy statement confirming that it's going to end asset purchase programs in Q3 of this year. And then losses in the Treasury market accelerated after New York Fed president, made a comment that a 50 basis point hike was reasonable. So definitely some weakness in the Treasury market today that did not spill over into munis today per se, as the market was pretty quiet ahead of the long weekend. But with today's slide raising yields on the Treasury side, week over week, we saw the 10-year yield in Treasuries up about 12 basis points to around a 282, which is the highest that it's been since December of 2018. And week over week, the 30-year Treasury was up about 20 basis points to around a 291. And that's the highest it's been since about April of 2019. Definitely, continuing to broach into higher waters on the yield side. Again, not all of that translated into munis, especially today as the MMD curve was left unchanged. And that's probably based on just a lack of trading activity in the market more so than anything else. But, it was interesting to watch this week. We definitely started to see heavier volumes on bid wanteds. There was about 1.8 billion on Monday, 2.1 billion yesterday, about $1.7 billion out for the bid today. So, definitely an increase in bid wanted activity. We keep seeing fund flows in the negative category. But all in all, we were about 12 basis points higher across the curve for munis. You had the 10-year increasing from a 234 to a 246, 30-year increasing from a 269 to a 281, and up front, 2-year increasing from a 191 to a 203. So, we're following Treasuries, maybe not as much today, but we'll probably see a little bit of a catch up as we go into early next week.
And definitely, you and I were at the Bond Dealers of America conference last week, and several major institutional investors were there. They thought that we might see a rates plateau in the near future, at least in the muni market, given some of the movements that have already happened. And, a lot of attention will be on those fund flows. The fund flow data we have right now is a week old. It's the ICI data, which showed that the fund flows through last week were the largest they've been yet this year. That's in a year of already heavy outflows. On the new issue side, the calendar was a little bit lighter this week and significantly lighter next week as people take some time away for the Easter holiday. But what kind of activity did you see?
Yeah, another factor that probably helped munis stay a little bit less volatile was that we only saw around, call it 6.5 billion or so get priced in the new issue market. Maybe upwards of 7 billion when you count some corporate CUSIPs that got priced. But that's relatively light and kind of expected for a holiday shortened week. BAM had a pretty active week. We priced over 160 million in new issue transactions. Some of the highlights for us this week were a $38 million deal for Conway, Arkansas, which was a restaurant gross tax receipts deal that had an A underlying rating and was priced by Cruz & Associates. We also were involved in a $24 million deal for Decatur, Illinois, which carried an A2 underlying rating and was priced by R.W. Baird. And then we insured 20 out of 28 million of a taxable deal for Cathedral City Public Finance Authority, which was priced by Raymond James and carried an A+ underlying rating. Next week, as you mentioned, for coming back after the Easter holiday, another fairly light week. Right now, the calendar is showing kind of plus or minus 6 billion. We'll see if anything else kind of comes into the market, but you know, given the tone that we've been seeing lately, it's more likely, it's less likely for things to kind of jump into the market than what we've been seeing. And for BAM's activity, will be focused on a $19 million transaction being priced by Piper Sandler for Oak Lawn, Illinois.
Thanks for your time today, Brian. Have a great weekend, and we'll talk to you next week.
Thanks very much, Mike.